So you're watching this video, a lot of your friends, colleagues are talking about a potential market crash. You've read the news, things are getting a little bit more expensive. You hear the term and the terminology about inflation, interest rate spikes. What does that all mean? In this episode, we're going to cover what is a market crash. We're going to look at potentially whether South Africa is going into a market crash and how to actually prepare for a market crash if something like that should happen. Right up next.
This episode of Money and Medicine is proudly sponsored by the PPS Health Professions Indemnity. For more information on PPS, please do go on our website.
So to lay a bit of a foundation, I just want to first define what is a market crash. So if you look at the definition, a market crash is a sudden dramatic decline of stock prices across a major cross-section of a stock market, resulting in a significant loss of wealth. A crash is normally fueled by a crowd psychology of panic selling, which leads to a season of downturn. So in short, a market crash is typically a single-day event, which is then fueled by more single-day events where there's losses in the market over a prolonged period of time, where we then enter what we call a bear market. A bear market leads to economic downturn, and it leads potentially to a 10, 12, 2-year period where we've seen economic crashes in the past. So let's look at a few examples of previous economic crashes in South Africa. Some of the most recent ones since we've become a democracy is the dotcom crash of 2000. And this was due to a massive tech bubble. So technology was the new flavor of the week. Everybody was investing in technology. It created a bit of a bubble and massive sell-offs came after that. That resulted in a 37% decline that lasted about 11 months in the South African market. Also, the global crisis of 2008. If you haven't watched the movie, go watch The Big Short. It's actually a very, very nice intro in layman terms of what happened due to the property bubble that was created in the US market. Again, this resulted in a 35% market drop in local markets, and the SA economy shrunk by about 1.5% during that time. Then most recently, I think everybody is still sort of like feeling the effects of COVID, but COVID crash of 2019-2020. This was where markets dropped 33%, obviously due to the pandemic lockdown and the events that followed. And this actually was over a period of about 4 or 5 months initially, and I think there's still an effect at play in certain markets over the world. So what specifically happened during this time? I know there's a lot of economic activity, a lot of technicalities which we can go down to, but I think for the layman and for the person watching this video, 2 important things stood out. Prior to these sort of like climates or prior to these events, inflation became out of control, which was then followed by a curve of interest rates, where they then spiked interest rates in order to maintain inflation. Now, I don't want to lose you there. Let's quickly jump into what does inflation mean? What are interest rates? What does that actually mean? And why is this relevant to you? Why is that important? So if you look again at the definition of inflation, it's an increase on the price of goods and services over a certain period of time. This normally happens during a period when there's a lot of economic activity. So think about it. So let's say there's a lot of market currently in the economy. So a lot of people are doing well, businesses are doing well. Obviously, that will lead to people rising their prices because people are still coming. If you own a certain shop, let's say you're selling fruit and you are full each and every single day, another guy might potentially also open up a fruit market next door because he sees you are doing well and you're now increasing your prices because both of you are doing well. He's increasing his prices, and all of a sudden you get a situation where the general increase of prices and services are actually going up. This is then curbed with interest rates being spiked by the South African Reserve Bank. So why do they do this, and what is interest rate? So interest rates is your lending rate. So if they spike interest rates, it means it's becoming more expensive for the consumer and for the business out there to actually borrow money. So it takes a lot of money out of the market because you're paying it towards additional interest, right? So if you've got a bond where you're paying 10,000 Rand, now all of a sudden you're paying 11 or 12 because they actually spiking interest rates. more of your cash flow and more of your pocket is going into interest, and actually that's being taken out of the economy or out of the market. So it means that inflation can be curbed because of the goods. There's not a lot of money that's currently flowing through the market. And that's in essence what's happening. So what happened to interest rates and inflation during previous market crashes just prior to that? Well, inflation peaked in certain instances between 7 to 9%. Currently in South Africa, by the time that I'm shooting this video, it's 5.9%. And consequently, prime lending rates actually peaked at 15.5%. Currently, at the time of this video, prime is 8.25%. I get a lot of clients asking us, is lending rates going to continue to go up? Well, 8.25%, it was 15.5% in the past. I don't know. You make the call. So what's currently happening? Let's have a look at what's currently happening in global markets. US inflation, 8.5%. 8.5%. They are continuously hiking their interest rates in order to try and curb US inflation. South Africa inflation, as I mentioned, 5.9%, which is just below the upper limit, by the way. Interest rates have just been hiked. We saw a 0.5% increase, or another way of saying it is 50 basis points. And we are expecting another 0.5% over the next couple of months, which will take it just shy of 9% in terms of the prime lending rate. And this is all due to various reasons, such as fuel prices, Ukraine and Russia war. South African transport has gone up dramatically. If you just look at year to date, it's gone up by 14.7%. COVID lockdowns and supply drops, massive countries like China, which is big importing countries from South Africa, all of a sudden they've got COVID lockdowns. Political drama going on locally as well as internationally. Locally, we've also got some electricity issues, so we've got load shedding. Again, that's also a knock-on effect on the local economy. We had the floods in KZN, which caused a shortage and a demand of goods and supplies. All of this leading to inflation. So I would say that the typical issue with inflation is where there's economic activity. This is quite unique because it's external factors that's leading to inflation. And the middle class South African is experiencing that part of it, but also experiencing interest rates that's going up. So what's the predictions? Well, the United States is likely to go into a recession. A recession is where they've got 2 quarters after one another where there's a decline in the gross domestic product. And that's currently happening in the US. So most probably they will go into a recession, and that will lead to South Africa potentially also going into a recession, or at least an economic slowdown, as what we've seen is happening in the past. If you look at what experts are saying, Robert Kiyosaki, the famous Rich Dad, Poor Dad author, he says the biggest crash in the history is coming. If you look at what Elon Musk, the richest man in the world, is saying, Tesla is cutting 10% of their workforce. He has a super bad feeling about the economy. If you look at Michael Burry, he's the guy actually that predicted the big property crash in Big Short in 2008. He's saying everyone is lying. There's a bigger crash coming than ever before. And the famous Warren Buffett says that indicators are showing there's a market crash coming. Stocks, if you should look at stocks, Naspers, the giant of the South African economy, or the giant of the JSE, is down 26.9%. MTN down 15%. Prosus, which is the sister company of Naspers, they down 36%. Bitcoin down 39%. Then also other big international companies like Apple is down 22%. Facebook is down 45%. So things are looking a bit tough, but that's not why we're having this podcast today. It's not to preach doom and gloom. The good news is that if we look at what happened in the past and we looked at what followed, a lot of upside came from these times. So those that survived the market crashes, businesses, individuals that came out, they came out much stronger, exponentially stronger. The biggest returns in the history of if you study history, came 4 to 5 years after the massive market crashes happened. Some of the biggest companies like HP, was born in the midst of collapses and market crashes. Stocks are cheap. Real estate will become even cheaper. So it's a good time for you. If you do have cash, and if you are in a position where you're working prudent with your money, you're going to pick up stocks and real estate much cheaper than what you would a year ago. So be prepared. Don't be one of those people that's ignorant, that just thinking, it's not that bad, things, won't happen. Proper planning prevents poor performance. So it's important during this time to position yourself. And I get the question a lot. Look, Stefan, what if a market crash is not coming? Well, then you've at least prepared. You're not putting a spare wheel into your car expecting to hit a pothole tomorrow. You've got that spare wheel there so that if you hit that pothole, you know what to do, and then you've got a plan B. Well, the same thing here. So if we don't go into a market crash, awesome, very nice. Then at least you still prepared yourself and you still positioned yourself quite nicely. So a couple of tips that I want to leave you with in order to prepare yourself should a market crash hit South African and global markets. Well, firstly, stay positive. There will be opportunities. Don't try to look through the noise. Don't listen to all the pessimists. Warren Buffett has made his billions each and every single time after market crashes because he's seen it before. He's seen it again. A lot of people were asking, why is Warren Buffett all of a sudden in cash? Is he expecting something? It's because Warren Buffett was preparing. So it's important for you to stay positive, know that there will be opportunities that you can invest in. Stop comparing yourself to people and companies that seems light years ahead of you. Do what you can. Just focus on your job, do it better, bring value to the marketplace, be loyal to your current employer, and do what you do best. Be one of those persons that's a problem solver, that is a solution, and take the small steps daily. We've seen during previous market crash, somebodies became nobodies, but we also saw nobodies becoming somebody. So during this time, if you can actually see more than before, you would be that one that become somebody. Work on personal development. So who do you think your employer will keep when things go south? The person that's been working on himself over the last 3 to 4 to 5 years, or the person that's just complacent and just doing, by the way, there's so much opportunity, so that person actually just slipped in that position and that position was hand-plated to him. No, it's going to be the guy that's been focusing, the girl that's been focusing on increasing value, positioning themselves to be a leader, a dominator. We've actually done a very nice episode on how to become a dominator. You can check the link up in this video. Go and have a watch at some of the traits, some of the attributes as a medical doctor that you can actually incorporate to be better at what you are doing. Keep mapping out fresh ideas based in changing conditions. So try to anticipate what's going to happen. Try to listen to the news. If you're not sure, read up. What does this mean? If someone says this is happening in the market, what does that mean? Try to anticipate. Try to position yourself. We are anticipating a potential market crash. We are seeing that it might happen. So what is the next steps? Go and Google what, as a medical doctor, if you've got your own practice, what should I do? Check what previous doctors did that were successful. If you watching this episode, but you're not necessarily a medical professional, you're a business owner or you an entrepreneur, also go and have a look at what other entrepreneurs did that made them successful in previous market crashes. Cash is king. So try to avoid major debt. So if you're going into this, you're watching this episode, you're going into this market crash and you've got bad debt, please try to kill off that debt. Please try to use some of your savings and cash to try and cash it off, because interest rates will most probably continue to go up, which will mean that you will spend more towards bad debt and bad credit. Also, if you are over leveraged, meaning that if, let's say, you've got a property portfolio of 5-6 properties and 3 or 4 of them miss a rental payment, it means that you can go under. Reevaluate that property portfolio. Reevaluate who you have as tenants, because during the next couple of months, if you've got somebody that's actually squeezed financially, they're struggling and interest rates are going up, you will be the person that will be squeezed and the person that will feel that. Then also take time to study your portfolio. As I said, cash will be king. So if you're somebody that's sitting on savings, you have been prudent, you have been budgeting, and you studying your portfolio, talk to your financial advisor. There's going to be massive opportunities where you can invest over the next 2 to 3 years, where you can invest in cheap stocks, making sure that you're positioning yourself, creating exponential growth going forward. But use that also as an opportunity to cut any of the stuff that you're not using anymore. You know, if you're paying for insurance products and you haven't checked out what you're paying for over the last 4 to 5 years, why are you still watching this video? Contact your financial advisor, ask him what I'm paying for, make sure that it is still relevant, so that you can cut anything going into this recession that's just going to cost you money. And then look at your budget. Time for unnecessary expenses is over. You have to go and sit. We did a very nice episode that you can watch. I'm also throwing the link up there that you can watch on saving in terms of your grocery budget. So practical tips that you can actually use to save on something as simple as your grocery budget. So go sit, talk to somebody that's maybe an accountability partner, a spouse that can show you some of the blind spots and show you how to actually rectify your budget. I truly hope you did find this episode useful. Again, I just want to say the purpose of this episode is really not to make you negative. I think the purpose of this episode is to get excited because there will be massive opportunities. And if you can see this will be happening, go and position yourself. Go do your own research. Go Google and see what to do during a market crash. This is just a couple of tips. There's many more that you can do to position not only you, but also your family and your future in the right hands. So until next time, plan the plan.